Welcome to Right Side Trading, where you can learn how to trade on the right side with confidence. Today is April 11, 2016. It's a Monday, and the market has already begun, but we will go ahead and give you our market review for this week. Before we do that, I do want to bring your attention to our website. And if we go to our disclaimer page, over here, right here, where it says, our products and services are provided solely for educational purposes. Our written and verbal statements, including those provided on our websites by our staff members, testimonial individuals, affiliates, and clients, are personal judgments and should be regarded as such. These written and verbal statements do not constitute investment advice. The government does want us to let you know that we are not licensed professional advisors, so please, before you make any trading decision or any investment decisions, please make sure you seek the advice of competent professional licensed investment advisors. All right, that being said, let's go to the market. Now, what I am not showing today right now is what is going on today right now. As you can see, the market is up already about 14 points on the SPX. So I'm really just taking a look at this based on what was happening as of Friday, okay? That being said, let me do this real quick. Let me remove this line real quick, and let's remove this line right here. So these are the two important lines that I really want to bring to your attention. And why is that? The first reason is because this was last week we were talking about this, or really about 2-3 weeks ago, we were talking about this line being the last line of defense for the bears. And when the market was showing somewhere around here, let me see if I can zoom in. When we were looking at this right here, we said, okay, this is the last chance, in my opinion, for the bears to really take back this bearish market, okay? And what we needed to see was a follow through to the downside. That unfortunately did not happen, okay? And so what we do have now is that instead the market actually went higher and broke this. And I said, if you watch the videos that I did about 2-3 weeks ago, if the market breaks above here, then it's very slim chance that the bears will be able to take control of this market again, and that the bulls are probably in pretty much full control. Now, that being said, we have to take into consideration, let me remove this line for a second, and let me draw this as a better line. So we have this right here. Okay, so we're looking at this line that when if the market does, or when it does clear this line and closes above this line, this is our true and official confirmation that the bear market is completely over. Okay, most people will say that when the market closes above here, we are now out completely of the bearish market. However, to wait till then would mean that you'll be missing out on all this bullish run right before that happened. And we, in fact, also missed out on a number of them. We missed out on when the market, when it first started going up here, we said we were not going to partake in this. We thought the market was going to come back down over here. We decided to short the market to take advantage of the bears possibly taking control. That didn't happen. We lost money. Same thing happened again right here. We were absolutely sure that it was going to start going back down. It didn't. Right here, it showed signs that it was ready to go back down again, but it didn't. We didn't lose any money because we didn't partake in that. Same thing right here. We said we will be cautious and wait to see whether there really is some follow through to the downside. It didn't happen. So that was 4 times in a row. And so when this one came, we said, look, this is the last chance for the bears to really show us that they are ready to take this market down. Because if not, then we can expect the market to, keep on going higher. Now, at this point in time, when this happened, we started looking at like, why was this happening? Because if we truly were in a bear market, it was not behaving like a bear market should. And how should a bear market behave? A bear market should behave in the sense that we see bearish signals, bearish structures, the market should go down. But we were seeing bearish structure, bearish signals, but the market kept on going up. We saw it first time, second time, third time, but fourth times back to back to back of bearish structures, but no follow through, and instead going higher and higher and higher are all signs of the beginning phases of a bull market. So we had to go look and say, well, what was going on that was causing this? Because it wasn't like the economy was improving. It wasn't like companies were coming out with good earnings, but the market kept on going up. So it was at that point in time that we learned about all the quantitative easing that was taking place in China, Japan, Europe, and the likes. And so that made us look at it and say, well, if by here the bulls don't take it down, then maybe this is the beginning of the next bull rally. Okay, similar situations happened in 2009, and so that was what made us prepared for that. So that being said, now we come over here, and now the bulls took it higher, and then there was a pullback all of last week. The interesting thing to note was the fact that in any breakout like this, sometimes people try to catch the breakout as soon as it happens. So basically on this green candle right here or this green candle right here, they would have taken that and gone up. But sometimes you get a second chance where the market pulls back, resets itself before it takes back up again. So that's what we're looking at in this case, is that, the market came down and, it settled right on this same trend line that used to be the resistance that is now acting as support, and it's probably setting itself up for the next phase higher. So how high could it go? We don't predict how high a market could go. All we try to do is just watch to see what it's doing and see if we can partake in it. So that being said, we are looking at two lines right now. This line right here is our first line of saying that, okay, if the market by the end of this week should close below here, maybe the bears are kind of trying to take this back because, quite frankly, we have had such a bullish run for the last month and a half, almost 2 months, that, it won't be unreasonable to see some kind of pullback, a swing trade pullback, maybe a deep pullback to, like, say, half of this move right here. For those of you guys who might know what I mean when I talk about a Fibonacci ratio, see a pullback over here before we have the next phase up. Okay, so it will not be unreasonable to see that. Okay, so that being said, rather than looking at this as a bear market, beginning of another phase of a bear market, we see this as if it should go down, it will be just the beginning phase of a pullback, not a bear market. Okay. That being said, on the other hand, if we see the market close above this line right here, and actually let me change this color to red. And the reason why I want those red is because those are the two immediate lines that we have to watch out for. If the market closes above here, then we can expect the market to keep on going higher. Okay, if it doesn't and it closes down below here, we can expect the market to go lower. So those are two levels that we're looking for the market to tell us what it's trying to do. In the meantime, it's possible that the market could bounce back and forth, up and down between here. Let me extend this to the right. The market could keep on bouncing back and forth, up and down between these two lines as it stabilizes itself and takes a period of rest before it decides which direction it wants to go. Okay, so that's pretty much it when we look at the market, in the sense that we're expecting this to be the continuation of a bull market, but at the same time we are so overextended in the fact that we've been going up in a bullish rally for some time that it's not unlikely to see a rally back down. However, the stronger cases in the cases of the bulls, because of the fact that not only did it break this downtrend line, which is a significant downtrend line, but it's actually acting as a level of support over there. Okay, so we'll have to wait and see what happens, but pretty much that's how we are looking at this market. So what does that mean for stocks that you're in? We are more into bullish stocks right now than we are into bearish stocks. Okay. And I would just say this, it's very difficult because of the fact that it's so extended up here to find some good entry points for some bullish stocks. So that being said, you have to be careful. However, if you are in some stocks that are bearish that are doing well, stay in those. And if you are in some stocks that are bullish that are doing well, absolutely stay in those as well. Okay. But at the end of the day, the most important thing is to realize that we are approaching a level where either the market is going to keep on going higher, and people might wonder, how can they keep on doing that while it has already been extended for quite some time? But it's not uncommon to see that in the beginning phases of a bull market, okay? Lengthy periods of time of, just continuous rallies before it takes a break, okay? So that's pretty much it. That would do it for our lesson for today. You can always go back to our website to learn more. Again, we have posted a lot of stuff on our blog page right here. You can go to our blog page and see some of the featured posts and stuff like that. Well, if this ever comes up, there is. Okay, so you can see, some of the videos that we've posted up there. These are literally, trades that we've taken ourselves by Solomon or myself, so just our views on the market itself. Okay, so you can go over here and you can watch all these. If you want to watch any of the previous market reviews that I've done, you can, look for the ones that has my name on it, Wally, and you'll be able to see those as well. All right. That being said, that's pretty much it. So again, guys, you can go to our courses page right here and learn a little bit more about the courses that we do offer. Just teaches you how to look at the market the way it is. And we'll be coming up with some new stuff that will show you just even more stuff that we do and how we look at the market. And if you want to learn more about our mentorship program, you can definitely go to our mentorship program right here, check it out, and learn more about how we trade the market. Okay? But that's it. So again, like I always like to tell everybody, remember to trade on the right side with confidence. All right? I'm going to go ahead and sign out.